Welcome back, everybody. Sive here with the ForexPeaceArmy.com. Let's take a look again on the gold market. So gold behaves differently compared to the euro currency. For example, it hasn't shown as deep retracement as in other markets, including the euro currency. It mostly stands near the top, which looks actually good. So tight consolidation, as we already talked about, is near the top. It usually the bullish sign because market is building an energy and stands near the potential area for breakout. By taking a look at the recent performance, it might be important, although not everybody pay attention to this. Let's take a look at the recent two candles, guys. This one and a kind of the indecision. So you can see doji stands somewhere inside of the previous range. And what has happened yesterday is market is moving back to the top of this pattern, close above this top. So it means, or might be treated as a kind of the choosing of the direction. Of course, today is really hot session, so we have lots of important events, debt releases, CPI, central banks, and so on. So maybe it's not quite reasonable to take activity, take trading today, but sometimes it often happens that such days very often provides good chances for good potential positions. And based on the current picture on the daily, it seems that, well, at least this makes me think that gold looks bullish in the current circumstances. On the 4 time frame chart, the same story. You could see that market is returning right back up to the top and now stands on the tight consolidation near the triangle border. In general, it confirms our triangle consolidation that we talked about. So here we have some contradicting patterns around in opposite directions on the top. So you can see first bearish grabber, then the bullish grabber, but I wouldn't pay too much attention to this. It might be just a byproduct of the current consolidation. It carries not a lot of actually sense in the current circumstances. More important in the way how market performs and how it behaves around. Another reasonable moment here, if you recall, that potentially it might be downside ABCD pattern, right? So we said that it might be kind of the ABCD. So for actually ABCD pattern, don't you think that it's so deep retracement? It's actually market returns back right on top of the C point with this ABCD pattern. This is definitely not the bearish performance and not typical for kind of the ABCD shapes. So it's another reason why it might be the preparation for the possible upper breakout. Concerning the targets, so of course it will be first top here. This might be taken, but also you probably could calculate the extensions by yourself using this potential butterfly on the breakout. So take the extension from this most recent swing to the upside, and you get the targets which might be achieved if market will start forming the butterfly pattern to the upside. So if you take a look at the hourly chart, you could see it better. What's particularly I like here is the triangle. It's important, especially at this point. That's the C point that I was talking about. So here, what does it mean? It means that overall background looks bullish, and if we wouldn't have lots of central banks meetings and other stuff, we would consider taking a long position. And actually, we could consider taking a long position. Just, well, it might be not as simple, and risks of a high volatility and be washed out with the market now is a bit higher. But at the same time, I see that there is a reason, some reason exists with the possible position taken, just because you could place relatively tight stop. All that you need is to use this triangle for a possible position taken, placing stop somewhere outside of it. Because if market will not break it up and triangle will be broken down, it means that at least it will return right back down to the support area. This is the best case. In the worst case, we will get downside breakout and more extension in the shape of the possible downside butterfly here. So everything will be resolved right from inside of these patterns, So that's why it looks, well, reasonable to think about this trade. Your risk will be very small in the current circumstance, but potential looks really great. And very early will be know if something will go wrong. So personally, I think that it's worth our attention. So you could make your own decision, of course. Just decide. Maybe you have some opposite view. I do not know, but by my opinion, at least it's worth it to try. It's contain really great potential. This small pattern is very important, especially for taking into consideration all other stuff. Because on the 4 time frame chart, it also might be treated as a kind of the bullish dynamic pressure. So because we have the downside trend here, and market is not forming low lows, it's forming high lows, showing sideways consolidation. The major risk here will come not from the technical background itself, but from just occasional spikes and volatilities that may happen on important events. That's what really brings major risk in today's session. So that's probably all for now. Let's see what will happen, and see you tomorrow.